This video will walk you through doing problem 7-1 work together from our textbook. So at the top of the tab, it tells me to go to page 198 in the book. So I'm at page 198. I'm going to read to you what it says for work together. It says journalizing entries to write off uncollectible accounts, direct write-off method. If we recall, what the direct write-off method means is that once we identify an account as being uncollectible, we have to remove it from being an asset. And so we are using the direct write-off method as a means of identifying specific accounts and writing them off. So Cracker Inc., that's the name of our business, uses the direct write-off method of recording uncollectible accounts expense. A general journal and a cash receipts journal are provided in the working papers. These are your working papers. Here's your general journal. Here's your cash receipts journal. Source documents are abbreviated as follows. Memorandum, M, and we use a memorandum when we identify accounts uncollectible, and receipt, R, and we issue a receipt anytime we receive cash for something other than daily sales. And I'm your instructor, so I will guide you through the following examples. Journalize the following transactions completed during the current year. So we start out with January 10. So what we need to do is we need to go ahead and write our year because we're starting a new journal page. And we write January. If you don't have your year and month show up like this, if it looks more like this, you can click this little button right here called wrap text, and that will put it on top of each other for you. And then the other thing you can do is adjust the height of your cell. So if it looks like this, you can just pull it down and make your cell a little bit bigger. You're going to click between these two rows. So we need a day. It's going to be the 10th of January. We need account title. If you guys recall, we drew 3 T accounts on the board. And the reason for that was that it affects accounts receivable because we're removing an asset, but it also, we're removing the accounts receivable. We've identified as uncollectible. We know we have to remove it. But it also affects our uncollectible accounts expense. That's where we write it off to. And that uncollectible account expense reduces our capital. So originally we increased our capital when we made the sale, and now we need to reduce the capital now that we know that we're not going to get that money. So it's going to come directly out of our pocket instead. So because we're using special journals, we have subsidiary ledgers, so it's going to actually affect 2 accounts for our accounts receivable. But first, let's write our debit. So our debit, we said, is going to be to uncollectible accounts expense. And we know that's a debit because it's an expense. Expenses are contra capital accounts. And since capital accounts are increased with a credit, and a contra account means that it has the opposite normal balance, we're going to increase the expense account with the debit. So we're going to write uncollectible account expense. We're going to write our document number, which is going to be memorandum 13. We have no post-ref. Usually you don't fill out the post-ref column until you post to the general ledger. And then our debit is going to be for $261.54. So now we need to write our credit because we have to have debit and we have to have credit for every transaction. This is where we're going to have 2 accounts that are affected. So we're removing our accounts receivable, and since the accounts receivable is an asset account, it's going to get removed or reduced with a credit. So, but if you remember, it affects our main accounts receivable account, and then it also affects the specific account of Melinda Sanford. And this is where we drew the 3 T accounts on the board. Well, if you remember when we looked at the journal, the general journal, when we journaled this, we had to put a slash between the 2 accounts to indicate that it was affecting both accounts. So we're going to go ahead and do that. Accounts receivable / Melinda Sanford, and my dog is growling in the background. So if you don't have this nice indentation, what you could do, my indentation looks funny still. What you can do is come up here, and right here, this button, it says increase indent. Click it, and it will indent because it is the standard or common practice to indent your credit. So we've indented our credit. Our credit amount's going to be the same amount for our debit, $261.54. I'm too tired to type. Okay, so we have the post-ref column. Well, if you recall, we need to put a slash in this post-ref column to show that this one credit is affecting both of these accounts. So in post-ref, an easy way to do this is to come up here to Borders, click this drop-down, go to More Borders. You can click across right here, and now you have a slash. So this entry is now done. We're going to move on to the next one. On March 12th, we wrote off Mark Polk's past due account as uncollectible. It was for $45, and we used memorandum number 24. Since it's a new month, we need to write the month again. So March 12th, and again, our debit's going to be an uncollectible account expense. It's going to be memorandum number 24. And the amount of our debit's going to be $45. Well, now we need to write our credit, right? Our credit, again, it's affecting two accounts. It's affecting accounts receivable, and then it's also affecting accounts receivable for Melinda Sanford. And I think I explained to you guys why in class, but this Melinda Sanford accounts receivable account gets totaled and written to the accounts receivable journal. So now it's affecting both of them. So again, we're going to do accounts receivable, and instead of Melissa Sanford, where it's going to be Mark Polk. So again, we need to put this slash in our post-ref column, so we can just come up here, more borders, click across, and we have our post-ref slash. Our credit's for $45 because our debits and our credits have to equal, and so this entry is done. Moving on to the next one, April 13th, we received cash in full payment of Andrew Leslie's account, previously written off as uncollectible for $67.42. It's memorandum number 31, and it's receipt number 158. So this is the type of transaction that's going to affect two journals. We first have to reestablish the accounts receivable account, which we do in the general journal, and then we have to account for receiving that cash. And anytime we receive cash, it goes in the cash receipts journal. So first thing we're going to do is write in our general journal. So this is the month of April. It's the 13th. And since we're increasing our accounts receivable, we're saying that this gentleman owes us this money and that we are expecting to collect it now. It's an asset once again. It's going to affect accounts receivable. And then it's also going to affect Andrew Leslie's accounts receivable. So we have to do that same thing where we put a slash in between the accounts. It's going to be memorandum number 31. And we have to come back and we have to put a slash here as well to show that this debit is going to affect both of these credits. So if we don't want to keep clicking through, an easy way to do that is we can come up here to this one, select Format Painter, and then click on our cell and it appears. The reason I didn't use this one is because this thick line is a format. And so if I did Format Painter here and pasted it, it would put a thick line right here. I'll show you real quick. So Format Painter, and now I have a thick line where I don't want one. Okay, so that's why I use this one up here. So our debit is going to be for the previously written off amount of $67.42. And then we need to do our credit. Well, our credit is for collection of uncollectible accounts. That's the account that we're going to use when we collect money that we weren't expecting to collect, that we had already written off. So it goes under other income at this point. It's a revenue account. Revenue increases our capital, and the way that we increase revenue is with a credit. So collection of uncollectible accounts. And the only thing we need to do for this one is put in our credit amount, which is $67.42. Okay, we're not done with this entry though. So we reestablished our accounts receivable account, but now we need to go get the cash for it, and we have to we need to account for the cash, and we need to reduce our accounts receivable. So we're going to go to our cash receipts journal. So we need to do the same thing we did on the other page. We write our date. It's 2014. It's April. It is the 13th of April. The account title, for this, we're just going to put the name of the person. It's going to be Andrew Leslie. This is his accounts receivable. The document number, this is where we use the receipt. The receipt indicates that we received cash that's not part of our daily sales, so it's R158. We don't put anything in post-draft for this. And this is an accounts receivable credit. So we received cash, which means that some of the debt that was owed to us was paid off. So we're going to reduce our accounts receivable. Since accounts receivable is an asset account, we reduce it with a credit. So it's going to be a credit of $67.42. And of course, we have to increase our cash amount. We increase cash with a debit. And that's going to be for $67.42 as well. So we are now finished with this transaction. We're going to move on to November 15th. On November 15th, we received cash and full payment of Melinda Sanford's account, which was previously written off as uncollectible for $261.54. It was memorandum 84 and receipt 313. It's the month of November, the 15th day. We're going to use the same format that we did up here. This affects two accounts. We're reestablishing our accounts receivable accounts. And this time, though, it's for Melinda Sanford. We wrote this one off in January, and then she paid us in November. So, like I said, we're using that same format. So we want to use memorandum number 84. We want to put a slash in it to show that this one debit is affecting both of these accounts, the main accounts receivable account and then the sub account of Melinda Sanford. The debit is for 261.54. This is how we're reestablishing our accounts receivable. We're saying we now expect to collect 261.54, which is done immediately because we already have the cash in hand. And then our credit's going to be the collection of uncollectible accounts. Our credit will be for 261.54. And again, we're not finished. We now need to go to our cash receipts journal and show that we actually received this cash. So we come over here. It's November. It was the 15th. Our account title is Melinda Sanford. Our document number is receipt 313. And again, it's going to be accounts receivable credit because we're showing that that amount is being reduced. And it's going to be for 261.54. And then our cash debit, again, is for 261.54 because our debits and our credits have to equal. Okay, so we have now finished this entry. This completes 7-1 work together. And it is your turn to practice doing 7-1 on your own. Good luck.